Hey, it's Mike Lynch with Cross Country Mortgage, and it's Monday. Time for your Monday morning mortgage update for the week of July the 24th. Almost the end of July. Gosh, next month kids go back to school. It is flying fast. Hope you had a fantastic weekend. Gail and I had a wonderful weekend. We actually spent the weekend up in Mount Shasta, McLeod, Dunsmuir, and we actually visited Mossbury Falls. For me, it was the first time. And if you've never been to Mossbury Falls in Dunsmuir, it is worth the 1.5 mile hike in. Got to go by the railroad tracks. Not a big deal. They are actually working. The city's working on creating a trail that is a public access trail. But again, unbelievable, spectacular. Go in the morning. You miss the crowds and take a dip in the water. If you're a cold plunger like me, it's worth the dip. So again, great weekend up in that area to beat the heat. So what's happening in the market? What happened last week? What's going to happen this week? I always try to give you tools, tips, tactics, scripts, knowledge, things that you can take with you and talk to your buyers and sellers when they have all these questions about the market. So what happened last week? Last week was pretty flat, nothing really. And this is such a big change compared to what we've seen over the last month. So let's go right to the chart here so you can see that. This is the trading of mortgage-backed securities in the bond market. This represents this. I show this to you all the time. It's a live feed. Each one of these bars represents 1 day of trading. So when we see green, that means money's flowing into the bond market, rates are going down. When we see red, money's flowing out of the bond market and rates are going up. So when we see this downward movement, rates are getting worse. When we see an upward movement, rates are getting better. So if we look last week, the 6th, we actually saw a huge improvement in the market. A lot of this was related to the inflationary numbers that came out that showed inflation was actually getting better year over year. Still month over month, not great, but year over year, much better than last year's numbers. And, you know, we saw this flat run in the month of June, and then we saw it get worse in July and then get better. And now we've seen it kind of level out a little bit. So this week, huge week, major economic news coming out, a lot of reports coming out, a lot of volatility this week, but we always talk about three things. So the three things that are going to impact the market this week are the FOMC meeting, the Fed meeting, the housing numbers that are coming out, inflation. There's so much other stuff that it would take me 20 minutes to explain everything. So those are the three main things. So let's talk about the FOMC meeting. The Fed meets every 6 weeks roughly. They decide if they're going to raise rates, lower rates, to give economic projections. So this week, on Tuesday, the meetings always start and they end Wednesday. And then at the end of Wednesday, they come out with what they said. And Jerome Powell gives his an idea of his remarks. And everybody expects the Fed to raise the Fed fund rate another 0.25%. They left it flat last meeting. They expect to raise it this meeting. And remember, when the Fed raises the rate, why are they doing it? To fight inflation. We've seen inflation year over year come down, but month over month it's been going up. So the real big news coming out of this meeting is, what are they going to do at the next meeting? In September, are they going to raise rates again? In, I believe, November, the next meeting, are they going to raise rates again? And we're starting to see signs that inflation is starting to abate and come under control. But is the Fed really going to take this news and act on it? Is there going to be dissension within the ranks of the Fed members that said, hey, we need to keep raising rates because last couple weeks, some people have said yes and no about moving forward. So what they say at the end of the day, Wednesday, is going to be very impactful on the market. Second thing is housing. Bunch of housing numbers are coming out this week. Last week, we had housing numbers, and those housing numbers showed some interesting stats. The average day houses on the market nationwide is 18 days. Houses that have sold in less than 30 days is 76%. And the houses that are selling above listing price are about 33%. Now, this is a nationwide, but it also is very representative to where we are locally, if you look at the numbers. And that came out last week. And this week, the two biggest reports that come out are the Schiller and the HFHA report. Now, these are the two most impactful reports that give an idea of what values and prices and appreciation is doing. And they've been showing appreciation going up the last couple months. So I think 3 months. So what are they going to show this week or this month? Schiller is more metro centric. So it shows numbers in the metropolitan areas, where the HFHA number shows everything more inclusive, including rural. It's really more representative of Northern California and what our numbers look like. So pay attention to that HFHA report. It's showing appreciation in our area month over month over month, and that's positive. So let's see what it looks like this month. And remember, those numbers are always a couple months behind, but we want to see appreciation, and that's positive. And then the last thing is inflation. A big report coming out on Friday. That's a PCE. It's a FOMC is the Fed's favorite report that shows inflation. Now, we expect this to go down year over year, but month over month, it's been going up for the last 26 months. It's been gradually decreasing, but it has been going up. So will the market pay more attention to the year over year numbers like they did with the CPI and the PPI last week, or will they pay attention more to the month over month numbers? So if it shows, if that PCE report is up, that means inflation's up, and that's bad for rates. If it's down weaker than expected, that's good for rates. So we're paying a lot of attention on Friday. So we're starting out the day and the week floating. Very, very volatile week. We're not going to play with our clients' rates. If we see any shift in the market, we're going to lock. If you have any questions about the market, please let me know. If you know somebody could benefit from this video, please forward it to them. Have a fantastic, productive week. We'll talk to you next week. Bye-bye.